Good evening, everybody. Welcome to the Luck in Your Success Trade and Market Update for November 25th, 2012. I can hardly believe it is almost December, and the year is just about over. It has been a great year, so I am looking forward to the rest of the year being very good as well. I hope everybody had a great Thanksgiving. As we were discussing last week, in the SPX, we had come down into the bottom of our support level. We had this one bullish candle here at the bottom, a little bit of a, not quite a real hammer, but almost a hammer here. Either way, it's a bullish candlestick pattern. And we've, as I was saying, I was expecting a rather large bounce off of this, and that's what we got. I did say it is possible we may come down into this trend line before we bounce, but I didn't think so. I figured we were going to get a bounce first, and I thought it was going to be a significant bounce. And as you can see, that's exactly what happened. This is pretty much what's been happening with every sell-off for all year long, and realistically for the last 2 years. So you come back here, we get this very hard sell-off and a huge bounce. Hard sell-off, huge bounce. We got some turbulence down here, but we got this again, right? Another hard sell-off and a very, very significant bounce. Notice all these bounces come back to form a nice cup. They basically come back to the level where they sold off of. And that was true with this one. It was true with this one, this one here. And it's just been a recurring pattern all year long. So this should be no surprise at all. In fact, I would consider it a sign of weakness in the market if this bounce didn't come all the way up to this area right here, which is the about that 1430 area, to complete this cup. And I would call any turn or significant turn before that area bearish, at least short term. So if we start to pull back fairly hard this week, I would expect a retest to these lows, and then we have to see where it goes from there. But I'm looking for the market to come up to 1430. If it doesn't come up to 1430, again, I would consider that at least short-term bearish, and I would expect things to turn over. Let's just push this to a one-year chart just to zoom in a little bit. All right, so now we can see this a little bit closer. The hard sell-off and the bounce. We're just coming back into this downtrend line. We also have resistance here. We have resistance here. I would see a turn here to come down. I'm not talking one day, but I'm talking a significant pullback. I would consider bearish. And then we'd have to watch the bottom of this for a double bottom and for it to take off again. Certainly a break below this low would be pretty bearish. And if we get a move up to the 1430 area, that is the downside of this trend line. I would expect some sort of a reaction down from there, and then a continuation up if it were to come there. If it doesn't make it there, like I said, that's not overly bullish. If we take a look at our NDX, we have much of the same situation here. We did break the trend line, which is a slightly bullish sign. Again, I would want to see this come up to 2700 before I get too excited to the upside. Otherwise, I would have to still be a little bearish on this. On the Dow, we came right up into trend line. We reverse here. Again, that's bearish. If the patterns hold, the bullish patterns for the year in general, we would expect to move all the way up to 13.3. And if we all go all the way back to the Russell, we are in the same situation here. We broke back up into our channel, and I would expect to move to 830. If we do not get that move, anything under that move or turn before 830, a significant turn, I would be construed as bearish. So we're just waiting to see where this bounce goes. And if we turn early, we're probably coming back down to retest these lows. If we decide to break higher over 830, then it's all systems go for an end of the year rally. All right, let's take a look at how our positions are handling this huge whipsaw. We'll take a look at the December M3 position first. Okay, so I just I had the wrong position. I just clicked it in. Anyway, I made some adjustments during the week. I was negligent in, or I forgot to update the website here. I did post everything on Virtual Trading Floor, SMB, and this is basically what's been happening. As we came all the way back to, let's see, 765 here. We're all the way back to 765. as the market started taking off, I started throwing in verticals in here. Early in the week, I did the 750, 770. I did a total of 5 actually. These were pretty much done at the same time. They just filled separately. And then I did another 2 750, 770s on Tuesday. And on Wednesday, I did another a 750, 780. And on a little bit later on Wednesday, I did a 770, 780. So basically what we have here is we still have the 8 750 butterflies. We have 2 770 butterflies. We have, let's see, 5, it would be 6 750, 770 verticals, and we have 2 750, 780 verticals. Show all for a minute here to confirm if that's actually what we have in the account here. And then, of course, we have our 10 IWM calls, and we have our single Russell 720 call still. So this puts us 8 put butterflies at 750. We have 2 put butterflies at 770. We have 8 750 calls. 6 of those calls belong to 750, 770 call spreads, and 2 of those calls belong to 750, 780 call spreads. And that, I believe, is it. All right, so the position as it sits is still up around $1,000 despite all this running around. Our delta is actually negative, and if you look on option view, it's significantly negative. Here's a look at option view here. You can see the risk graphs are quite different. This is showing me, if I reduce this or divide this by 10, it's showing minus 26 delta, which is perfectly fine. It's showing me 53 theta, which is perfectly fine. I am positive Vega. I don't like to be positive Vega. I did decide to hold it over the holiday weekend, positive Vega, and the reason for that is I am not going to make adjustments on a Friday of a holiday weekend. It's a half a day. The volume is very low. The market moves in manners that may not be representative of what's going to happen Monday when the traders come back into the market. So I'm not going to make my decisions at that point. I held fast and did nothing on Friday. We shall see what tomorrow brings, and if we get a large or substantial up move tomorrow, we will likely have to pull some of these butterflies forward to deal with our Vega issue. However, as of right now, the position looks fine, and we shall see what Monday brings. All right, let's take a look at our bearish butterfly for December. What we have here, if you remember right, we started at 800. We were forced into a delta theta roll because the volatility is so low and the market was skewed to the upside. Therefore, we rolled this thing to 820. We got whipsawed. Really, really hard down move. All the way to the point where I had to take this and roll it back to 780. If you remember right, when I talked about initially doing this roll due to delta, that we don't necessarily need to do that until we actually hit our add point, which at that time was 840, and we never did reach 840. So I could have held it at 800. And in retrospect, that would have been the better thing to do here. However, sometimes it works out, sometimes it doesn't. So this is where we ended up. We got kicked back to 780, and now we have this very large rally. We now have a reference point of 780. We have an add point up here at 820. So if the market pulls all the way to 820, then we're going to add. We do also have delta theta considerations, and we are, of course, way over our delta theta ratio add-ins. Because of the whippiness back and forth of the market, I am going to wait a little bit before I go ahead, and because it was a holiday week, same type of thing on Friday. Because of that, I'm going to wait a little bit before I make any sort of a move here. The more important factor isn't that I rolled to 800 now. The more important factor is that when we reach 820, that I am in an 800 and 820 going forward. And then at 830, we will make a roll to 820, 840, and we'll continue to stay with the market from there, however high it goes, or unless we maximum loss out. and depending on where the market goes, either scenario could happen. Of course, if we pull back and double bottom, we'll be perfectly fine on the pullback here. So the position looks fine. Would have been much better off, obviously, had we not made that delta roll and then got kicked back. But all is fine. If no major concerns with the position, we will just stay the course here and follow our guidelines. And one other thing that I did do is I entered a bearish butterfly for January, which is going to be here. I actually entered this on Wednesday because as I said, I do not like to trade on Friday. And I entered at 790 short strikes. The market was only at around 800, or even I think a little bit under 800 when I went ahead and did this. And the reason I'm up so close to the market is at the time the 780 was already past our maximum delta theta ratio limits. The guidelines tell us at that point to enter a little bit closer to the market, and that's what I did. So here we sit at our 790s. We paid an outrageous 1654 for these. The actual price may be a little bit different. That's just what Option View was showing. So we'll just use that as an example. It was right around that price. It may have even been a little bit higher. As of right now, we're pushing delta theta ratio issues already. And if that's the case and we get over 810, we'd be looking at a roll-up if we choose to do so. Again, it's not so important that I jump on this with a delta theta ratio problem with 1/3 of a position in. What's more important is if we actually hit our 830 add point, that I do roll up to 810 and then add at 830 rather than just adding in an 810. So here is what this position looks like. And again, this is very unusual, heavy market skewing to the upside. Volatility is very low, and despite the down move we just had, which is another indication of the fact that there's really no fear in the market, despite this very significant down move that we had, VIX barely budged. The VIX bumped a little bit, but not very much at all. And that's basically telling us that there's not people buying puts. There's not a whole lot of fear in the market, and makes this bounce all the more likely, which did happen. We shall see where things go from here. Things may change. Coming into the end of the year, once Christmas gets over with, we shall see. All right, that's all I have for now. I will keep you updated when it changes. Thank you and good night.